52 years. Your parents or your grandparents telling you, since you've become an adult, for example, that they have a fund for you, a gold fund that is worth $35,000. They tell you that they started that fund back in 71. And yes, and you grow up thinking, well, I have $35,000 worth of gold, and it never changes. Your parents show you the numbers, the paperwork from the bank, and it says $35,000, and then they die, and you take over, and you realize that you actually have 1,000 ounces of gold, that they were valuing that gold at $35 or $42.22 as well, that you had $42,220, which it's a nice amount of money, but it's not life-changing. But then you realize that they were marking that to the old price, and that you could mark it to $4,000 now, and you actually have $4 million. Well,
Scott Bessent is unusually bullish about 2026, and Monaco thinks he knows why. A major gold revaluation may be coming. The U.S. holds 8,133 tons of gold, still priced at the old 1973 rate of $42.22 per ounce, valuing it at just $11 billion. But at today's approximately $4,000 per ounce, it's worth over $1 trillion. Updating this valuation would create a huge instant windfall without raising taxes or debt, just like FDR did in 1934, when revaluing gold helped flip the economy from deep contraction to strong growth. Monaco also cites a recent Fed paper on gold revaluation, and gold reportedly moving from London to New York as signs something big is coming. Thanks for watching. Subscribe to Fine Metal for more updates.
Mr. Bessent, I think it was over the weekend, so he did an interview with Maria Bartiromo. I don't watch Fox News. I'm in the UK. I don't watch TV at all, but someone on X posted a little clip, and I'm not going to play it because sometimes you play these clips and YouTube kind of blocks it because of copyright infringement and so on. But I took some notes, and this is what Mr. Bessent said. One thing he said that I thought was interesting, he said that they're bending the curve of prices lower. I guess he means they're getting rising prices under control. I'm not too sure about that. I think the CPI or CPI is still running near 3%. So, and I think we could see a second wave of inflation. But anyway, that's what he said about prices. And he sees an increase in real incomes in the first quarter and second quarter of 2026. He said as well, 2026 will be a great year for working Americans and for the markets. He called it parallel prosperity. Scott Bessent, the Treasury Secretary of the United States, he's recently made some interesting comments about the economy to Maria Bartiromo from Fox News. And I thought to myself, what does he know that we don't? He seems to be very bullish for the economy, not just for Wall Street, but Main Street as well. And I'm going to tell you why I think he is. Gold revaluation, yes. And we're going to look at what happened to the economy and the markets in 1934 and 1935, because there's a major gold revaluation in January of 1934 with the Gold Reserve Act. I think it was January 30th to be exact. And the price of gold, the gold had of course been, most of it had been confiscated into the Treasury's coffers. and from the American public through Executive Order 6102. And I suggest you Google that and look at that executive order. Basically, it was a de facto theft of Americans' gold or money by the US Treasury. Yes, they redeemed, they gave you Federal Reserve notes in exchange, $20.67 for each ounce of gold, or just $20 for each, let's say, $20 gold piece, or $10 for each $10 gold piece, and so on. You were allowed, though, to keep up to $100 gold dollars. So you were allowed to keep 5, let's say, $20 gold eagles. You're also allowed to keep numismatic coins, like collector's coins, mainly because the Secretary of the Treasury at the time, I think his name was Wooden, Mr. Wooden, was a coin collector, so he made sure that was in the executive order. On January 30th, 1934, the price of, gold was revalued from $20.67 per troy ounce to $35. So a major revaluation. Yeah, the American public's gold, which is held at the Treasury, which was confiscated by FDR, is only valued at around $11 billion. Yes, you can look at the Fed's balance sheet and it says $11 billion, and it has been there since 1973. It might have changed a little bit because I think they sold some gold in the late 70s, but anyway, it's been at that level since then. It's akin to the story I told you about your parents or grandparents leaving you some gold and saying it was only worth $35,000. So it's a windfall, and I think that's why Mr. Bessent seems to be so confident to go in front of the world and tell the world that the U.S. economy is doing well. He says here, what does he say exactly? Well, he says that 2026 first and second quarter, I'll give you whatever. Yeah, he said it will be, U.S. economy will likely substantially accelerate in Q1, Q2. Let's say they revalue it to 4,000, where we are right now. Let's see where we are. We are just below 4,100. Well, or if they revalue it to 44,222, which is 100 times, well, that 11 billion becomes $1 trillion. If they revalue it to 8,400 and change, that would be 2 trillion, and so on. And you get the picture. And that 2 trillion goes into the US Treasury account at the Federal Reserve. The Federal Reserve has the gold certificates, and they would give the Treasury the difference from the new price to $42.22. That would be the profit. And some people argue it could be 15,000, 20,000, who knows. That, of course, would be massive. That's like you getting the windfall. You do loads of stuff. And that windfall was used to kickstart the New Deal. Yeah. And it was also used to infuse capital into you could call it like a sovereign wealth fund of the 1930s. It's still around. It's called the Exchange Stabilization Fund. It's a fund that the U.S. Treasury Secretary can use to stabilize the markets. But anyway, this is what happened to the U.S. economy after that revaluation. All that cash, that ill-gotten cash that Treasury got, was used to, for loads of government programs to build infrastructure, Tennessee Valley Authority, all those things that created jobs. So I asked GPT, actually. It's much easier to do that, then go through loads of numbers through files. So I asked, what was US GDP growth in 1932 and 1933? Those are really bad years for the US economy. So it says here, real GDP growth in 1932 dropped by 12.9%. And in 1933 by 1.3%. And it says here, these reflect the final and most severe phase of the Great Depression before recovery began in 1934. So what happened in 1934? Well, real GDP growth grew by 10.8%. And in 1935 by 8.9%. The stock market, because Mr. Bessent is saying that not just Main Street is going to do well, but Wall Street. So in 1934, actually, it wasn't a great year for the stock market. It says here that the Dow Jones Industrial Average finished roughly flat, with a slight decline overall. But it says that things stabilized. And in 1935, actually, the Dow rose 38%. And it says that it was one of the best annual returns of the decade. I'll read you the first paragraph. He says, with public debt at high levels, so let's say you had that 1,000 ounces, and now we find out that it's actually worth $4 million, not 35,000, and you had $1 million in debt, a mortgage. Well, you'd be able to pay it off. I would. I hate having debt. Some people maybe would keep borrowing. Who knows? But it says, with public debt at high levels, some governments have begun to explore financing additional expenditures without raising taxes, while also not increasing public debt outstanding. That would help massively as well, because we know the U.S. debt is accelerating, public debt, and there's a lot of pressure on longer-term treasury yields. That would help that as well. One possibility is using proceeds from valuation gains on gold reserves, as has been floated in the U.S. And Belgium recently. For the U.S., this would involve revaluing the government's 261.5 million troy ounces in gold reserves, the largest gold reserves globally. Well, I'm not too sure about that. We're now seeing that even the mainstream press is saying that China might have a lot more. But anyway, from a statutory price of $42.22 per troy ounce to current market prices, which stand around $3,300. Well, that was almost $1,000 lower.